Hi, this is Mike Lodge. I'm glad that you've joined me on this Saturday morning. It is a cold Saturday morning. Now, yesterday on Friday morning when I got up, it was 60 degrees, raining. This morning I get up and it's 32 degrees. Big difference there. So it's going to be a cold day today. The wind is blowing, it's cold, it's cool, but the sun is out. So we'll warm up a little bit, probably get up to about 45. Listen, those of you who are small businesses and everybody is coming and talking to you and say, oh, listen, if you got a small business, you got to form an LLC, you got to form an S Corp, you got to do a C Corp, you got to do something to protect your business. Well, let me tell you something. If you're a small business, if you're an Uber driver, if you're doing Instacart, if you're doing Avon, if you're doing something that you're just doing spare time that you're making it into a business, you don't really need to do an LLC. You don't need to do another form of entity. What you need to do is file on your tax return what is called a Schedule C for business or profession. It's very simple. You have your income minus your expenses, minus some adjustments for meals and allowances and entertainment allowances. But you can do your business on your Schedule C, which is in your personal income tax return. Okay? So I always advise clients, listen, if you're going to get big up to $100,000 and going up, maybe it's time that you start putting together a other type of business entity. The problem is that when you do that, like especially if you're in California has an $800 fee that you've got to pay every single year, no matter if you made a profit or not. You might have had the biggest negative downward turn in your business, but you still got to pay that $800. So a lot of other states have the same situation where you have to pay that business fee every single year. So if you're a small company and you can't afford that $800, do a Schedule C because it's much simpler. So Schedule C basically is just an income statement. An income statement, it takes all of your revenue and income and it takes all of your expenses associated with it. So if you're an Uber driver, you've got your fuel, you've got your insurance, you've got your maintenance, you've got a whole bunch of different expenses that you can take. If you are doing home health care out of just by yourself, and you're working yourself as maybe as a caregiver, then everything is income and expenses, like every other business. Now, let me tell you this, okay? Let's talk about income for just a little bit. If you were to get audited, the auditor is going to come to you and say, I would like to see your bank accounts, your bank statements from January until December, for the year that you were working. So what happens is that that auditor is going to take that information, add up every one of your deposits, and see exactly how much money flowed into your business account. By the way, if you have a small business, make sure that you have your personal account and you have a business account. That business account is what is going to be reported to the Internal Revenue Service. Don't ever commingle because that just confuses the whole thing. So the auditor is going to take that information. He or she is going to look at how much money you deposited in your bank account. How many checks flowed in? How many credit cards flowed in? Everybody's doing credit cards, right? Because we're doing PayPal, we're doing all kinds of other different types of money receipt transactions using various apps and everything else. So at the end of the year, you had better make sure that you can explain the income and the money that's flowing into your bank account and how it's being used, the expenses going out. Okay? It's very simple. Talk to your tax accountant. He'll guide you or she will guide you through it and you'll be okay. But keep it a monthly log. Listen, I keep a journal. I'll show you. I haven't opened up this journal yet because it's brand new. But I keep a journal like this on everything, on any discussions, any meetings that I've had, any time that I take an individual out for lunch that is business driven. I write it into my journal. You can get these at like $20 or $30 at Office Depot. Get one and log it down. Remember, they want to know if you were actually performing business. Okay? You might be traveling someplace and you might be going from one place to another where you need to stop and get some food in order to get to that next stop. Now, on business meals, the IRS has been very particular about this because this year it's 100% deductible. Not like it's been in other years. It's only for this year now. Not like other years where you could only deduct 50% of your business and entertainment. But that business and entertainment meal has got to be business driven. In other words, you're meeting with somebody. You can document that you met with that individual on that day and that you were discussing whatever you were discussing. Okay? It's not that you're taking your son out to lunch that day. That's not deductible. It's not that you're going out and buying your wife a meal. No, that's not deductible. That is business meals that are driven for discussion of business, creating deals, talking tax issues, in my case, let's say. But it has to do with the drive of the business, okay? And then you have your mileage and you got everything else. So you've got a lot of different things that you can be deducting from your revenue. Remember, you're trying to offset your revenue minus expenses to get to a net amount. That net amount is what you're going to be taxed on, okay? So spend your money wisely for one thing, but also when you're spending your money for business, saying, well, is this really for business? And put it on a Schedule C. If you're doing a LLC or an S corp or a C corp, it's the same methodology of income minus expenses. Now, once you get past a certain dollar amount, though, then you're going to have to prepare a balance sheet. If you're doing another entity, a balance sheet which shows your cash, your assets, your liabilities, capital, expenditures, everything else. It's all right in the balance sheet. So, the point is, if you're a small business, you probably don't have to go out and do that LLC stuff and C Corp and everything else. And up until you get to a certain point. Right now, you can put it all on the Schedule C for business or profession, and you will be reporting correctly and be in compliance with tax law on reporting your business income. Lots of people are doing Schedule C's because they have small businesses. They might be doing auto repair work. They might be doing paint work. They might be doing sales. They might be doing the insurance sales. They might be doing a whole bunch of different things where they literally do have legitimate income that's coming in, legitimate expenses that are going out to get you to that net taxable income. If you have any questions, just send me a text at info@lodge-co.com. Talk to your tax practitioner. If you don't feel that you're getting the right answer from them, come back to me and we'll sit down and we'll talk about it. Okay? I do tax advisory work and I've been doing this since 1984, so I'm an old man. So, listen, I enjoy small business. You should enjoy your small business, but remember, it is a business, so treat it like a business. This is Mike Lodge. I'll talk with you soon. Listen, don't forget to like, subscribe, refer me on and share me with other individuals and other people that own small business. It'll be great to talk with them. This is Mike Lodge. Remember, like, subscribe, whatever other button is down there, do it. Talk with you soon. Have a great Saturday. Bye-bye.